I'm Kristen King, and welcome to IP Go, the show where we take a look at the IPO world past, present, and future. There's been plenty of excitement in the markets over the last week, though the headlines and stories about retail traders and short squeezes overshadowed the IPO market somewhat. However, there's been plenty to keep investors occupied in the world of new issues too. Perhaps the most impressive story was that of Qualtrics, the customer experience and feedback business that was partially spun out of SAP. Qualtrics priced at $30 above its expected range of $27 to $29, which was itself higher than earlier estimates of a price between $20 to $24. It raised $1.55 billion of new money through the sale of 51.7 million new shares and traded up by 53% on debut at $41.85 and has since gone on to print as high as $54.10. Other issues that recently hit the markets include Ortho Clinical Diagnostics, Agrify, and Vinci Partners investment. Agrify is an agricultural software specialist, and it sold 5.4 million shares at $10. That was substantially more stock than it initially planned to offer, and it was placed at the top of the expected price range, so there was clearly investor demand. The issue opened at $13 and rallied to as high as $14.30 on day one and went on to trade at $20. Ortho Clinical Diagnostics and Vinci Partners investment didn't fare so well. Ortho Clinical failed to break above its IPO price of $17, opening at $15.50. The company sold 76 million shares at the issue price. However, it had to cut the price to well below the expected range of $20 to $23 to do so. The stock is now trading above its issue price, however. Vinci Partners investment is a Brazilian alternative investment platform. Markets have been very active in Brazil over the last year, but that wasn't enough to tempt investors into the stock. The company raised $250 million by selling 13.9 million shares at $18, the top of its $16 to $18 expected price range. The stock opened at $17.70, traded up to $17.89 on day one. It subsequently fell to as low as $14.90 and has briefly been as high as $18.95. There's no shortage of deals on the calendar, which is full of SPACs and biotechs waiting to list. However, the two upcoming deals that caught our eye are dating app Bumble, which will offer 34.5 million shares in a range between $28 and $30 in a billion-dollar deal that's being managed by Goldman Sachs, Citigroup, Morgan Stanley, JP Morgan, Jefferies, RBC Capital Markets, and Evercore. Signify Health is another much-anticipated deal. The leading healthcare payments platform will place 23.5 million shares in a range between $17 and $19. Once again, the deal has a roster of blue-chip managers with Goldman Sachs, JP Morgan, Barclays, Deutsche Bank Securities, BofA Securities, and UBS all on the ticket. Both Bumble and Signify Health are expected to trade on February 11th. That's all we have time for this week, but as usual, make sure you do your due diligence before making any investment decisions.